This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview, or look ahead, as I like to call it, is for the week of April the 20th through the 24th with Charles Rotblatt, our senior market analyst here at Zacks.com. Man, hard to believe that we're already nearing the end of April. Earnings week in full stride, you tell us. Are most folks already looking on to Q2 and beyond as far as earnings are concerned? Have they pretty much written off the first quarter?
Not yet, and I think the big thing that we're seeing coming out of first quarter earnings so far is that earnings do seem to be a bit better than feared. They're not great, but they're certainly beating lowered expectations, and that's giving the rally a little bit of extra room, we should say, not necessarily fresh legs, but relatively fresher legs. This week, as we record this, we did see volume below average, so some of the buyers are starting to pull back or saying maybe I've put as much money as I want to into the market. But by and large, we actually are seeing some positive surprises. We are seeing the markets trend higher. As we record this, we're actually on pace for our sixth consecutive week of gains. So it's a positive. Obviously, there's still big concerns out there, but I'm not going to complain about 6 consecutive weeks of gains.
No, but are analyst expectations still too low as far as earnings go?
You know, we don't know, and there's really two things that still need to be solved. One is a banking crisis, the second is GM, and those are very large gorillas sitting out there. And until we get them out of the room, we're really going to have to be cautious, because if we don't get the credit crunch taken care of and don't get the banks lending, or more importantly, making sure that the very largest banks can still prosper and still keep their doors open under current ownership, that's going to have an effect on consumer spending. It's going to limit how much estimates can be revised upwards in the future and how quickly the recovery comes along. Secondarily, when we look at GM, if that does go down into a messy bankruptcy, that could have a very large ripple effect across the U.S. economy. There's no doubt that GM is going to go bankrupt. It's going to be forced in some type of bankruptcy, even regardless of whether or not it's actually called bankruptcy. There's definitely going to be a very massive reorganization. Mm-hmm. The question is it nice and clean and neat and done very quickly, or does it turn into a really messy situation with a lot of lawsuits? We don't know. Those are two huge threats, and those could have a very large impact. But we are seeing more estimates cut than raised for full year, so we're still seeing that downward trend. It's just that for a lot of companies, the actual numbers right now aren't as bad as feared, which is a good sign.
So what you're saying is that before anybody can talk about any full-fledged recovery, those two issues have to get resolved.
Absolutely. We're really not getting a sense that anybody has good visibility into the second half of the year. That's been a problem spot. That's something we were hoping to get. But so far, companies are able to see what's going on right now. But really looking past the next month or two, it's very difficult for any CEO to accurately predict what's going to happen.
All right, economic news light for this current week, but still it's there. Leading indicators, crude inventories, existing home sales.
Yeah, we're going to have home sales data on Wednesday and Friday, and I think that we'll get a look at out of all the data. Leading indicators always gets a glance, but people are still looking for a recovery in the housing situation. And since we will get both new and existing homes based on a little different set of criteria between the two, but it gives people some glance as to, are people buying houses? What kind of houses are they buying, and how are home prices holding up?
So the watchword is still stabilization, you think, as far as earnings in the market go?
Yeah, I think we're looking for actually, earning, well, not so much stabilization, but really the phrase is less than feared. As long as earnings keep coming out and do better than what people fear they might be, it's going to help the markets. However, we have had 6 weeks of rallies. Volume is drifting below average right now, so I think investors need to be careful, not take any unnecessary risk. But on the other hand, I really thought the rally would have ended by now, and it hasn't. So I'm certainly not going to go on a limb and say Monday or Tuesday or even Wednesday the rally's over. These type of things can last longer than anybody expects.
Got a nice assortment of stocks that could issue positive surprises this week, I will say that.
We sure do, and there were actually some companies coming out with some good pre-announcements. I talk about Allegiant Travel in here, talk about Brinker International. So we do have some companies that look like they could surprise to the upside. I also highlight one company, an oil service firm, that could actually miss expectations, and it does have a history of missing expectations. So, the fact that analysts are cutting estimates ahead of its earnings release is not a big surprise.
All right, do you own any of those stocks you mentioned?
No, I do not.
All right, and that one that could surprise to the downside is worth going to the text version of Charles' earnings preview for, if nothing else, just to see that. then the others that could surprise to the upside make some good stories as well. Zacks.com is where this is located. You scroll down the page until you get to the earnings preview headline next to Charles' picture, and it'll take you right to the most current text version. With Charles Rotblatt, I'm Terry Ruffalo.